Good evening, ladies and gentlemen. First of all, thank you for giving me the opportunity, and I'm really privileged to be part of a panel with such esteemed guests from the industry. What I'll do today is just give you a perspective of how investors like us or fund managers like us who have been investing in the power sector look at the equipment part of it. I think, sir, you mentioned about the five M's of the power sector. We have the 5 C's of the power sector. C stands for concern. And the 5 C's that we tabulate in our investment memo are essentially land, fuel supply, environmental clearance, PPA, and thankfully, equipment stroke EPC comes last in the list. Our proposals gets rejected in the first 3 list itself and doesn't go to the equipment part of it at all. So hopefully we consider that to be one of the least issue in terms of investing in a power company or investing in a developer who's setting up power projects. So having given you that that perspective or that laying that background, I think there are a couple of positives and negatives when we look at the equipment space from a domestic stroke international power equipment supplier perspective. First and foremost, our understanding of the equipment market has been that let's talk about some broad or maybe some 30,000 feet numbers. In the 10th plan, we put in across about 27,000 megawatts. That was from 2003 to 2007. In 2007 to 2012, we are roughly going to add about 40,000 megawatts. Whereas the target for the 12th 5-year plan, which is starting from 2013 to 2017, we are estimating or we are expecting the country to add about 115,000 megawatts. Now, we all know that we estimate a higher number, but we don't reach that number due to various issues, and some of them are very, very reasonable issues which you have to deal as a country. But I think today, given the kind of implementation or given the kind of projects that we are seeing taking shape on the ground, we feel that the equipment market, there is a temporary scenario of an overcapacity. If you were to take just broad numbers, I think Mr. Bansal just pointed out that BHEL per se is ready to supply 20,000 megawatts by 12. So if you were to multiply that in a 5-year scenario, BHEL itself can cater to 100,000 megawatts of capacity in the country. And what are we planning to set up in 5 years? 115,000 megawatts. Then you have the Duzans of the world, you have other equipment suppliers who are looking at the Indian market. So clearly from a short-term perspective, or a medium-term perspective, we feel that there is an overcapacity in the power equipment market. The second question is then, why do we go behind the Alstoms and the Siemens of the world? There are, I think, particular factors which probably a developer considers or what we consider as points that why do they go to them. First and foremost, maybe it's the pricing part of it, because I know that when we did an investment, Siemens offered us for a gas turbine at a cost of about 2.8 crore per megawatt, which was supposedly pretty cheap from that context. The second part is technology. For example, today I know that even with reduced gas, GMR is able to achieve an 1850 kilocalorie efficiency in their machines because they have some of the best machines from Alstom. So maybe technology is one of the factors which basically pushes the Indian developer to go to a foreign. But there are some negatives when you look at it. I think we personally have faced issues with foreign equipment suppliers with regard to availability of spares, availability of service on the ground. Secondly, during the project implementation phase, there are certain issues with regard to manpower availability. There are certain issues with regard to basically gelling with the O&M operator or the owner's engineer. So these are some issues which we have with foreign developers. So to speak, we are not saying that they are not the best of the lot. All I'm trying to say is that currently, given the overcapacity, I think developers are. I mean, it's a buyer's market. I mean, the developers can essentially pick and choose which equipment supplier do they want, and I think the equipment suppliers are willing to go that extra mile to get that particular contract. Again, from an investment perspective, I think what we have come across vis-a-vis equipment supply and fuel. I think there is a strong linkage to these two elements, fuel and equipment supply. I'll give you an example. We were investing into a 300 megawatt power plant, which had an approved fuel mix of 70-30, 70 domestic, 30 imported. Now, in the last 9 months, fuel supply has become the biggest issue in the power sector. And this mix has now changed 30-70. 30 from domestic, 70 from imported. Now, we are facing a lot of issues with the developer, although I don't think the developer is sharing all the information with us. But what we understand from the market, given our limited understanding, is that changing the design to meet the different fuel supply mix is challenging. So I think I want to know from the panel and from the guests is that are equipment suppliers geared to this dynamic situation where because of the fuel supply issue, the plant design has to change and then you have to start construction. So this is one issue which as a equity investor into power projects, with power projects we come across. I think I will not speak much because I've just highlighted the issues what we think we have to look at from an equipment supply perspective when we are investing into equity projects, and I would rather have a discussion with the panel and entertain some questions. Thanks.